everybody, welcome to Protect Your Eggs in this special Wednesday market update. We're going to go ahead and issue this one out as a free market update to you so that if you have friends or family that are concerned about the stock market and the subject comes up, you can say, hey, check out this video. So keep this email on your phone. You can forward it straight to them in your email account. You can just kick it on over to them. So let's take a look. We've seen the S&P 500 pulling back here. This is what we're watching here. For all my new members, we look at charts of the S&P 500. This is a chart of price of the S&P 500 because price tells us the story of what's going on. So when we look at this, we see the market just falling off a cliff here. This is a pretty steep decline. Now, if we put this into context, this is a pretty good pullback here. This isn't really a sign that the market is typically crashing here at this point. If we go back over the last 4 years, we've needed a pullback. This has just been a continuous rally. You can see right here we had a little pullback in this area. You can see right here we had a pullback. That was a pretty good one. This was a pretty decent pullback right in here. Actually moved us into a cautious market for this time period. So for those of you that are not Protect Your Eggs members, actually I should say an unsafe market, was when we got out of the market right here because we didn't know what the market was going to do. It was questionable, and then we got back in right over here and have rallied this whole way up. So we've seen some pullbacks come in here from time to time in the market. Now this one's a little bit bigger than the others, but let's put it into context. Let's take a peek, look at our volume down here compared to our volume back here. Huge difference in volume. So that tells us a different story of the size of pullback this is. There aren't quite as many sellers. So let's continue to evaluate this a little bit and put it in perspective. You can see how we've had volume picking up to the sell-offs. Here's the sell-off, and volume just steadily rising here with the sell-off. Now there's a lot of stuff going on in the news, but this market has needed a pullback, and this is all this could be. We have moved into a cautious market. We're not sure yet if the market's going to rally because pullbacks turn into reversals, which turn into downward markets or crashing markets. And if that continues to happen, of course we'll get out. But right now we don't have that picture. Now I want to give you something that we consider to be a sign that there's some good stuff going on. Now we've been following the IWM, which is actually the Russell 2000 or the small caps, and they have been outperforming the stock market until here where it broke down. You can see that it led the way down. We got out of the Russell right here at 110. Now this is an ETF. For those of you that don't know what that is, go ahead and become a member. We'll teach you all about it. And we got out here, so we're sitting in safe territory for those of us that were invested in the Russell 2000. It is a stock. Now, the stock market itself is down even more today, but look at the Russell. It's holding. So this is actually a good sign. We've seen volume tick up, and now it's kind of tapered off, and we're seeing buy volume come in here to support the Russell. So that's a good sign for the stock market. I can't tell you that the market's not going to crash at this point. If we bounce back over here to the S&P 500, it could certainly crash. But the Russell holding is kind of a mitigating factor. Remember, we don't care what's going on in the news. We know the economy sucks. We've had some bad news. We've got Ebola. We've got ISIS. We have all this different stuff. If you're getting caught up in the why doesn't matter. What is going on in the market? Is it actually crashing or not? And that's what you need to know. If you're getting out of your stocks, your bonds, your 401k accounts at this point, you're a little bit early. Now the market could continue to crash from here. I'm not saying that that's not a bad move. We're just in a cautionary market at this point. We could find a support level here and rally right back up for new highs, just like we did if we look back here. I'm going to pull this back up, go back to our 5-year chart here, and if you look right here, market crashed, boom, look at that big decline here. And if you said, hey, I'm getting out, now we had to Protect Your Eggs, safety sell, alert, right in here, and we were out for this 6 months because it was an unsafe market. But we got a buy signal, and we got right back in, and then we've been partaking. So if you want to get out of the market, I totally understand, but you need to have some help as to when to get back in, and that's the consulting service that Protect Your Eggs offers to all of our members. So if we look at the Russell, it's showing some support here. That's a good sign for the overall market. Let's see if it stays green here today. But let's take a peek over at our bonds. As stocks go down, bonds historically like to go up. And check out this spike up in volume. Nice rally, moving right on up. Now this should be a pretty overbought indicator. We should see bonds pull back at this point. Similarly, we should see the stock market I'm gonna have to adjust my chart here. Let's go back to my 6-month chart that I like to look at. This isn't definitely oversold at this point. We should see some rally come back in here. We should see. Doesn't mean we will see. We just should see the market rally back up. So bonds overbought. Definitely, we could use a pullback here in our bond market, especially with this gap up. You know, a gap is any time where the market just there's just space in between the price. That's a gap. So we should see this pull back now at this point, and then rally higher. Could pull back right here into our old ceiling right in here. Let's see how we had this 110 mark. Would like to see it pull back right there and then rally higher. But you know, when stocks go down, bonds have the tendency to go up, and there's not a lot of room for bonds to go much higher, so that's something to keep in mind. Now let's take a peek at gold, because we always cover gold. Everybody likes to talk about owning gold. Big sell-off in gold, and now we're getting a pullback. Now it's just a revert. It's the opposite of everything else we've been looking at. It's been selling off, selling off, selling off. Now we're getting a little bit of a rally, and then that usually precipitates more sell-off. So gold is still not a safe buy. Bonds look great. Your Russell is still not a safe buy. Let's take a peek at bonds really quick. Really safe market here in bonds. If you don't move your money out of one thing into another yet at this point, maintain your allocations the way they are. Just move your assets out of stocks if you're not invested. If you're invested in small caps here, we are in an unsafe market in our small caps. So if you're looking at your 401k, anything that says small on it, that's going to be invested in these small caps. And it's just unsafe. Just doesn't mean it's going to go down. It just means that there's a higher probability of it going down than going up. And if we look over at our S&P 500, we are in a caution. This is a big pullback. What typically happens once we have a pullback like this? Old floors become new resistance. So now we've got resistance here at 190 that we'll have to break back above. And if we kind of look at where our resistance and support points have been, 192. Even in these $2.50 increments, you can see how, you know, right here we had some support. See that little support right there? A little bit of support. And how that, again, I need to clear this up, how this 195 mark could become a new resistance point and cause us, but we've needed a pullback here. This market, I've been talking for all of my members who've been following me. I said this is a pretty good pullback right in here. I was happy to see it. Pullbacks lead to new rallies. Now we've got a pretty good pullback. Pullback can either rally or it can crash, but typically it likes to come up back up here and retest this level before it decides to crash. Now let's take a peek back here at the Russell 2000, just really quick to give you an idea how that works. I need to look at a 9-month chart because it just didn't crash overnight. Look at this right here. Here's our high. Look, it retested the high after this pullback, pulled, and then rallied right back up to that high, then crashed, and rallied back up, and then proceeded further. So markets take time to turn around. They don't just fall off a cliff overnight. Same thing here. If you're looking at the S&P 500 and we take it to a 9-month chart, we're at that high. We could certainly see it rally back up into here. There's definitely some resistance in here. So if it doesn't quite get to this point, we can anticipate that it's probably going to get back up here somewhere. Probably. I'm not saying with absolute certainty, I'm just saying probably. And then it would proceed lower. So that's what we're looking for. We're looking for this market to rally at this point. Bad news, Ebola, more of that stuff could drive the price down further, which is going to move our safety sell lower. And that's what we want it to do. As we move into a marketary caution, once we get that cautious market, we get out, and we're waiting for that market to move from a caution to an unsafe market, and then we'll move our assets to cash, because the best thing we love is market crashes. When the market crashes, we get to buy back in at cheaper prices. That's exactly what we show people how to do here at Protect Your Eggs. So I hope this has been a good review for all of my current members. For all my non-members, please sign up, get the information. Don't allow your 401k, your IRA to be decimated by another stock market crash. Now, I'm not saying the market's crashing, but it doesn't look very good right now. There's a lot of negative signs, but we do have a glimmer of hope in the Russell 2000. So thanks everybody for the special midweek market update, and I will see you on Friday for your normal market update, and we'll cover all the events of the week. Thanks. Bye.